Eurozone inflation edged up last month to the European Central Bank's 2% target. It confirms that the era of runaway prices is over, shifting policymakers' focus to trade war-induced economic volatility. Inflation in the 20 nations sharing the euro currency crept up to 2% in June from 1.9% a month earlier. Energy and industrial goods continued to pull down prices, offsetting quick services inflation. Underlying inflation, a closely watched measure that excludes volatile food and fuel prices, meanwhile held steady at 2.3%, in line with expectations. Anticipating this fall, the ECB has lowered interest rates from record highs by 2 full percentage points over the last year. And debate has turned to whether it needs to ease policy further to prevent inflation becoming too low given weak growth. The development in services costs, which have been stubbornly high for years, is pivotal as it's raised fears the domestic inflation could get stuck above 2%. The outlook, however, is complicated by the fact that it depends on the outcome of a trade dispute between the EU and Donald Trump's administration. For now, the conflict has reduced price pressures because it sapped economic confidence, pushing up the value of the euro and lowering energy prices. If US trade barriers stay, the EU is likely to retaliate, and that's bound to be inflationary. Firms will then start rearranging value chains, which would add to increased production expenses.